Traders at Access Bank expect more buying interest today as more investors take advantage of higher yields following the midweek primary market auction. Ademola Osuntoki is the Treasury Team Lead at Access Bank. Joins me now for more on the markets this week. Thank you so much, Ademola, for your time today. And let's get into how we've seen this week play out so far.
Yes, I think as you've mentioned, in terms of the key highlights today, we can see market is currently in a repo of about 390 billion, which represents a decline of about 582 billion from the previous day, which is owing to the NTB auction, which took place on Wednesday. Initially, there was about 400 billion thereabouts that was about to be offered, but we saw the CBN as well as the DMO work proactively together to offer about 1 trillion. And consequently, what we saw these rates increase. On the 91-day, it was about 17.24. On the 182-day, this was about 18%, and the same for the 364-day at 19%. So this represents a sharp increase from the previous auctions by about 1,000 basis points from the 91 and 182-day, and on the 364-day an increase of about 764 basis points. So we've seen some active trades, especially within the secondary window, as a result of a lot of market players looking after all of these attractive yields.
Yeah, definitely interesting times in the market here. But in terms of the yield curve activity for the rest of the first quarter, what are your expectations?
My expectations are we're expecting this to persist in line with the CBN governor's directive. What we want to see is we're expecting these rates to go up. We're aware of the MPC meeting, which is going to take place towards the end of this month, and this is going to provide further indication as to what their plans are, especially for these rates. In regards to the NTB auctions and subsequent auctions, we're expecting these rates to continue to go higher. Reason being, we're expecting more FX flows. If we look at the FX figures for this week, it stands at about 1.3 billion. Higher by 500 million from what we saw last week at about 831 million. So we can see that these attractive yields have brought in a significant FX inflows. So we're expecting this trajectory to persist in the coming weeks and months as we continue to fill the markets with more FX supply.
Yeah, definitely a good time for the foreign portfolio investors to come back in the market, you would say.
Yes. So we're expecting that because we know that what they want to see is they want to see real returns on their investments. We know that our current inflation is at about 29%. So we're expecting these yields as they continue to place higher. We're expecting these players to continue to play within this market as they're looking to get good returns on their investments. So as we said, it's on an upward trajectory, and we're expecting more FDIs as well as FPIs to play within this space.
Yeah, earlier you were touching on the secondary market activity and how this would impact it. I would like you to elaborate on that further because and more give us a sense of what we can expect in the medium term.
Sorry, can you repeat that, please?
What you expect in the medium term for the secondary market activity as a result of the yields?
Okay, so what we're seeing currently is we're seeing these yields trade at about 17%, which is good. You know that there's a lot of demand on them, as I mentioned earlier, with the stop rate for the long end at about 18%. So these are actively trading at about 17% levels as at today, which is a good rate for a lot of people within the secondary market.
But in terms of liquidity, though, what are your expectations or concerns?
So we know that currently the market is in a repo. It was a big move from the CBN to take out at about 1 trillion from the market. So today's figure is at about 390 billion in the red as the day opened. But I believe there's no liquidity concerns as for now. We're expecting this to level out next week as there'll be further coupon payments as well that will come in to level out the market.
Yeah, beyond liquidity though, what are your biggest expectations for next week?
Sorry?
Your biggest expectations for next week?
So my biggest expectations is we continue I think there was a big move this week when we saw the CBN governor come out and provide his views in terms of what he's expecting to play out, and speaking positively about how he's looking at bringing FX flows. A key problem for us is that supply. We've seen them be proactive in terms of some of the key measures that they've outlined within the coming weeks with the net open position, especially, which outlines that banks can either be square or short by 20% of their shareholder funds. Essentially, this is in a drive to provide more liquidity into the system. So expecting to see more insights from him within the coming weeks in terms of what his views are. And as I mentioned earlier, we know that the MPC meeting is going to take place towards the end of the month. So we're expecting an increase anywhere from 100 to 200 basis points from 18.75, which is the current position. So we're expecting to see what's going to happen within that meeting.
All right, thank you so much for that breakdown. There are definitely interesting times in the market here. The central bank governor is also currently speaking to the Senate here, the economic team of the Nigerian economic team, speaking with the senator, outlining their plans. Ademola Osuntoki there is the Treasury Team Lead at Access Bank.